Hey everybody, this is David Scarica. So today's stock chart of the day, we're going to look at the CPI. So it came out this morning. That's one reason the market is selling off, and it was higher than expected. So what's interesting expected is that when you have these periods of inflation, people kind of tend to have this like, I guess, belief or whatever that like for example in the 1970s, it was just double digit inflation the whole decade, right? But actually there's lulls in the inflation and then there's spikes during these periods of inflation. And then, the periods of disinflation and like very low inflation just kind of goes sideways for decades. So what I want to show you here in this video is this is the CPI for the mid 60s to early 80s, and and we're showing the 1940s as well. And again, we can see these spikes. So there's this little spike here to about 6-7% in 1970, and then this lull back to like 3%, and then this spike here to 12%, and then another spike to near 15%, which was of course the end. And then Volcker raised rates, and then we had basically 2-3 decades of pretty low inflation. Now, some of it was because they started massaging the numbers in the 1990s, and that actually lowered the rate of inflation. So like probably this like 2-3%, it was probably like really like 3-4-5%. But whatever, for that, whatever, it still was a period of longer inflation. So, but again, when I want to show you this, and this. So I don't know where we are. Was this last spike here, the one we just had recently? Was it here? I don't really know. Like it was 8% on the last spike, so it was a little higher than this first spike in 1970. But of course, the actual inflation itself was probably more like this spike here, so 12. So I don't know if we're going to have two or three. But you can see why we would have these spikes of inflation, because especially with the baby boomers retiring, the amount of pressure they're going to put on Social Security, Medicaid, Medicare, all the unfunded liabilities in the next 10 years, that it's going to be very difficult. I know that they have Doge going on, but Doge is just cutting these agencies and kind of this excess government to actually cut the nitty gritty of, these social programs that everyone takes for granted and everyone thinks going to be there in their old age. That's going to be much more difficult. I think the way that they're going to be able to fund these programs is by doing a lot of inflation, and probably the services will deteriorate. We've seen that. Like I'm from Canada, and the universal health care or whatever there is not very good anymore, right? So, um, anyhow, that's kind of it. So that's interesting there. This is the 1940s, and we can kind of see the same thing here in the 40s. Now, this chart has these three, but I'm not going to use this one in 1950. I think more like, again, we're talking about this was the late 30s. That was really the third. And you see the higher highs. 1950 was kind of, even though you could say there was four peaks, but the thing about this was there was a peak because, they did all that spending during the war and they had to start inflating the debt away a bit. So that's why we had that peak. But either or, you can see there's 3 to 4 peaks. And the first peak was right before the 37 recession, which was another deflationary bounce. And here, and here. But like, regardless of like, you consider this the third peak or the fourth peak, but look what happens. Like inflation went back to almost zero right before the end of the war from 12-13%. And then it went to nearly 20% during kind of right at the end of the war. You can see this was kind of the post-war recession when, all the spending for the military kind of got brought back. So, that was propping up the economy. And then you can see this kind of post-war boom when it started also led to this big inflationary spike. Again, part of the reason because rates were artificially low because, they were borrowing a ton of money for the war. And again, with the huge national debt at the time after the war, they kind of needed inflation to get rid of it. So then you can see then when actually went negative in the late 40s in this spike here. But we can see in each case of both the 1940s and 1970s, what we can see is there's 3 to 4 very specific spikes, these little lulls, and then here. So I would think what we're in this kind of lull right now, or and who knows, you can see this went sideways for a few years, or in terms of the 1970s, you see they didn't really go sideways too long. It kind of was like a V bottom every time. So we could just be in this area here where like now we're in the bottom of this lull. And I don't care what people say or what Trump tries to say. I think these tariffs will be inflationary, and you could have these inflationary, and we could have the dreaded quote unquote stagflation, right? We could have stagflation where the economy is doing poorly or not doing very well at all, and prices are moving higher. Like for example, one thing that's caused this recently this little spike in inflation in January back to 3%. So that, by the way, that's what I'm talking about. The CPI came in at 3% higher than expected. It was egg prices right now. I'm sure you know when you go buy eggs are at all-time highs. So, because there's been this chicken flu, bird flu, and they've had to kill a lot of chickens. And of course, that decreases the supply of eggs out on the market. So, but there's part of the reason that inflation hasn't come down as much is, the government's still running these $2 trillion deficits and borrowing all this money. And by the way, the M2 and all these money rates are starting to pick up again now, right? And that has kind of like, I think that's what propped up both economic growth and also propped up inflation and not allowed inflation to go lower. And because the debt is so high, again, they kind of have to do what they did more in the 40s period where they had this happen, right? So you can see this is the CPI here from 1940 to 1952. You can see that 12-year period, consumer prices went up almost 100%. So if we consider inflation really picking up in 2021, 2022, after COVID, we're only in 2025 right now. We're only 3 to 4 years into this. And if it's a 12-year cycle like this, or this inflation cycle, the 70s, you can see really started to pick up in the late 60s and lasted until 1981, 1980. It's like that was 14 years. This was 12 years. So we still probably have another 12 years left of this, So, that's basically it. And again, you can see the lows. This is the cumulative, the inflation. You can see the lows, what happens, like that 40s here, then things slow down here, then things slow down here. So we're liking kind of one of these lulls right now. And then we're probably going to see that big pick up. But again, you notice that even in these lulls, it's not like prices go down. Here, these prices were slightly going up. Here, they did decrease a tiny bit because there actually was deflation, but we're not seeing deflation now. And you can see even after the 50s, when there was low inflation, then for most of the 50s and 60s, still from the late 50s to, the early 50s, sorry, to the late 50s, we still didn't really see prices go down, right? But this was why this was such a great boom, because prices were essentially flat to only slightly higher. And you had all this economic growth in the 50s, even with a very mild recession. I think it was in 1954. So anyhow, I just wanted to show you that. And yeah, so inflation, we're probably in this lull. And even though with this tick up, and is this tick up the start of another move higher? Or did this lull continue for a little bit? Like one thing that is going to happen is because the global economy has slowed a great deal, especially in places like China. We're not going to really see, I think, a significant tick up in energy prices. I don't think we'll see any energy inflation until the next round, because I think if oil prices do go down a lot and we see supply destruction, and then they have to print money in a recession to get out of it, then I think you can see spikes in energy prices. But I don't see that now. There's kind of a supply surplus right now. China, which has been most of the world's oil and energy demand of the last 20 plus years, is probably seeing like the real numbers in China. They're probably like virtually at zero growth. So, and I was just going to leave it at that. I hope you enjoyed this, and I'll talk to you all later.